Yeah, good morning.
Good morning, sir.
We have waited long enough, so I think it's very important to just start this class. So in our previous session, we discussed manufacturing accounts, and we saw 3 different questions on manufacturing accounts. And I believe that is enough to give us a good understanding. But then as students, it's possible we are getting a little bit of issues with 1 or 2. Let me quickly use these first 10 minutes to respond to any question that you have on manufacturing accounts. Over to you.
No question, sir.
Are you very sure?
Yes, sir.
Are you able to lay your hand on any past question?
No, sir.
Why? Is it that there's no time, or you feel you can always do that later?
I will try it later.
Please don't try it later. My advice for students, especially for online class like this, is after every topic, endeavor to lay your hands on past question and solve it. It's very important. It will help you. It will give you a good understanding of subject matter, and as well guide you as to how examiners ask questions and what is expected of you as solutions. So today we'll be looking at another interesting topic. It's a very wide topic, and I have decided to break it into parts. Today we'll be looking at the part 1 of it, and which is final account of companies. So the part 1 part that we'll be looking at includes, we shall be appraising the introduction, or we shall appraise the types of companies, share capital, component of financial statement. Then we also look at the formats for this level, what is expected of us. And lastly, we have a brief discussion on examinable question on this topic. So before going into detail of the topic, I'm sure you are aware of what we call company, right? A company business is different from a sole proprietorship business, and is different from a partnership business. One interesting feature of this company is that it is a limited liability. Before being a limited liability, a company must have registered in line with the provision of CAMA, that Company and Allied Matter Act, and that is what makes it a company. So a company is referred to as a legal entity or as an artificial person created by a number of people in accordance with the law for the purpose of a divine object. So a company can be set up for the purpose of making profit. A company can be set up for non-profit making. But what is important is that a business called a company is registered in line with CAMA, Company and Allied Matter Act provisions. That is what makes it a company. And that it is a legal entity. That is, the company is different from its owners. Under the law, the company is seen as an artificial person that can stand on its own. Is that clear now? So we have different types of companies. We shall appraise them. And as in case of a sole proprietorship business and a partnership business, every individual will contribute a sum of money used in running the business. We call it what? Capital. That's what we call it, capital contributed, either in a sole proprietorship or in a partnership. But in a company kind of business, it is called a share capital. Why do we have the term a share? Is because each and every individual have a specific amount contributed, a specific holding, a specific interest. So that's why we say a share is a unit of capital that is measured by a sum of money. Most of the time, it is a function of percentage and you will pay your own portion of that percentage. That is what we can refer to as a share. Now, we shall also appraise the component of a financial statement. Of course, we have discussed this under IAS 1. Can you still remind me of the component of financial statement that we have, Muslim? I'm listening to you. What are the components of financial statement?
Component of financial statement.
Yes, ma'am.
We have the balance sheet,
Okay.
that is the statement of financial position.
Which is also the same as balance sheet.
Yes. Income statement.
Okay. You put it on right. So we shall appraise it in this chapter today. So I remember telling you that the component of financial statement are what make up a published account, which includes statement of financial position, which is formerly known as balance sheet, which include statement of profit and loss and other comprehensive income, which is formerly referred to as profit and loss account. Can you remember now?
Yes, sir.
As I said, we have statement of cash flow, we have changes in equity, and we have note to the account and significant accounting policies. So we have 5 components of financial statement, which is entirely different from elements. Element of financial statement, as I discussed in our previous class, include assets, liabilities, equity, expense, and income. And the element of financial statement can be subdivided into 2 categories, right? Element of financial position, which represent the balance sheet item, and element of financial performance, which represent the income statement items. Did you get that now? So we shall look at the formats of these various accounts that we want to prepare, and also we shall have 1 or 2 discussions on this topic to further have understanding on it. And in the next class, boom, we go into question solving. A company is a corporate, is a body corporate. I mentioned this earlier because it is registered under CAMA. It has a specific requirement that has been followed. Under Section 39 of CAMA, before its amendment, there's what we call incorporation. Once a company is incorporated, the position of the law is that the company is different from the owner. It can sue and be sued. Now, a business can be formed as a company if it has its creation under the following: company and allied matter, and the enabling statutes of the government. So let me quickly change this. It should be company and allied matter. That's company and allied matter. Not, it used to be CAMT. Is that clear?
Yes, sir.
Okay, sure. Now, what are the different types of company that we have? We have company limited by shares. We have company limited by guarantee, and we have unlimited company. We have private company and public company. Well, all of this is a function of how they are classified. Is that taken? It's a function of how they are classified. So I could as well say that limited company could be seen from two angles: limited by guarantee and limited by share. Is that taken? But let's take the first one. Now, a company is said to be limited by a share when the shareholders are limited to the amount of money they paid into the business as capital, or the remaining amount unpaid on the shares allocated to them. So what that means is that in the event of liquidation, the individual shareholders will not lose anything except the total amount of money they contributed into the company as what? Share capital. Is that taken? Now, if we have a shareholder who has portion of his own share capital outstanding that is unpaid, in the event of liquidation, it will be limited to the extent of the amount of unpaid share capital. So let me create a scenario. Let's assume company ABC is in the event of cessation and they are owing external creditors 5 billion naira. And we have A, who is also a shareholder in company ABC, has contributed a total amount in monetary value of 100 million as share capital. Don't forget they are owing the creditor in billion, right? So now the shareholder A will only pay or will only suffer the amount he contributed as capital. If the money that he has contributed as capital is, say, 100 million naira, and you know 100 million naira is not enough to pay what? 1 billion naira, right? So the total amount of money he will only contribute is that 100 million naira. That is what he will suffer. He will not go ahead to bring another more money just to settle the company debt. So that's why we say limited by share capital. You are only limited to the amount of money you have contributed into the business. Now, company limited by guarantee. So there's what we call company limited by guarantee. In its own, they are companies that are created to promote culture, to promote sport, to promote tradition. Most of the time, they are known for profit making. So the liability of the member is limited to the amount they agreed to contribute at the event of what? Liquidation. And in most cases, this will be stated in the memorandum of association. Now, unlimited company, unlimited liabilities. In the event of liquidation, the members will go outside normal to pay their debt. What do I mean by outside normal? If the capital they have in the business is not enough to settle the debt, they will have to contribute from their private pockets just to settle the business loan or to settle the business obligation. Do you now see the difference? One, limited by share capital. You will not go ahead to use your personal money to settle the business loan. It is only the money you contributed into the business that you will lose in settling the business obligation. Company limited by guarantee. They are companies that are established not for profit making, but to promote recreation, to promote sport, to promote culture and other things. Now, the amounts they will lose or the amounts they are expected to contribute is limited to the amount agreed in the memorandum of association at the event of liquidation. Unlimited company, the members of an unlimited company will go advance to pay out of their private pocket if the amount contributed into the business is not enough to settle the business obligation. Do you have question at this point, please?
No, sir.
Thank you. But you understand, right?
Yes, sir.
Well, we'll do a recap during the discussion time. Okay. So, a private company, of course, you all know this. A private company has its member between 2 to 50. That is, membership minimum is 2 to maximum of what? 50. A private company always ends its name with LTD, that limited. Now, a private company does not have rights to sell their own share capital to the public. Neither can they transfer it. It is restricted. Now, a public company, their name always ends with what? PLC. A public company is formed between 2 and maximum of what? Infinity. Now, before now, it used to be between 7 and infinity. That is, maximum is not limited. You can be many as possible. But the change in KAMA has decreased the number of persons that could form a public company from 7 to 2. But then the name of the company always ends with what? PLC. A very good example was Nestle PLC, Nigerian Port PLC. So, for a public company, they can transfer their own share capital, and also the public can subscribe to the what? Issue shared capital. Another interesting thing is that a public company are expected to publish their company, to publish their accounts. It is statutorily what? Required. They are expected to publish their accounts. Yeah, it is statutorily required. Any question on this, please? No.
So concerning that public limited company, I don't understand. You said 7, 2 to infinity first.
Yeah, I said before now.
Okay.
Only 7 people is the minimum number of persons that can form a public company. The maximum number is not prescribed.
Okay.
But the law has changed. It is now a minimum number of 2 and maximum not prescribed. That's why we call it infinity. Why am I saying this? Is because of your objective question. You might see 7 there, you might see 2 there. Please pick 2.
Okay, sir.
Thank you. Now, let's explain what is a share capital. A share is a unit of capital which can be measured by a sum of money. I mentioned this earlier. As an individual, members of a company, what you contribute into the business is what we call a share capital. And most of the time, your own share will show the percentage of holding of ownership in that company. So we have different types of share capital. So all these are just for theoretical purposes, because examiner can ask you to explain the following type of share capital, divine a share capital, and discuss the different types of classification. So that's why all these are very important. So the first one is authorized share capital, issue share capital, called up capital, and paid up share capital. You can see the way I arrange it, because it's very important you know it one after the other. So let's go to the next slide. So you don't need to cram anything. There's what we call memorandum of association. This has been discussed under company law, right? In your ATS1. So that's why I'm not going into detail, because I believe they are what you know, but then let me still highlight it again here. So company has two major, documents, we are over major for formality purposes. We have what we call memorandum of association, and we have what we call articles of association. So the memorandum of association represents the constitution of the company, right? It spells out the rules and regulation of the company between the companies and the outsiders. We have a lot of information or content in the memorandum of association. One of the content in the memorandum of association is the amount of authorized share capital. Why do we call it authorized share capital? That is the total amount of share capital the company can raise. Is the what? Total amount of share capital the company can raise. It is also referred to as nominal capital. It is also referred to as what? Nominal capital. It can also be called registered capital. Now, if the total amount of share capital the company wants to raise is 10 million, and it has been stated, they disclose it, they identify it in the memorandum of association, that is what we call authorized share capital. Now, if me and you come together to form AM Nigerian PLC, and we need, say, 5 million as capital to run our business, we will state it in the what? Memorandum of association, right? That is the maximum amount of money that we need. Yeah, we can be raising this bit by bit, because that is what a share means. You are doing it bit by bit to get the total of what you need at the end of the day. Now, in as much that we have said that what we need, the total amount of capital we need to raise is 5 million naira. That is what we call what? Authorized share capital. That is what it has been authorized for us to raise. Do you understand that, please?
Yes,
now,
sir.
In the case of a public company, right? Now,
Yeah.
a part of authorized share capital, that can be issued, that have been issued for public subscription is what we call issued share capital. It's what we call what? Issued share capital. Don't forget, a public company can issue their own shares for public subscription. That is, they can sell their shares for other public people to come and buy. In the recent time, we have MTN selling their own shares, right? Telling the company to come and subscribe. Yeah, so that is what we're talking about. MTN is a PLC, and that's why they are given the right to make public sales of their shares. And that is done through the issuance of prospectus. Now, called up capital. The part of issued share capital which shareholders have been called to make payments is what we call the called up capital. Now, does that mean there's no issue share capital in a private company? Yes, there is. Don't forget, private companies are not allowed to issue their share capital to the public, right? But within the members stated in the memorandum of association, they can issue it among themselves. That is what issue share capital. Now, when the members of the private companies or directors are called up to pay a portion of the issue share capital allocated to them, then it is called what? Called up capital. Don't forget, this is just for theoretical purposes, right? What is important for us is that issue share capital. Because most of the time in your balance sheet, what you'll be seeing is what? Issued and authorized share capital. Now, lastly is paid up capital. Paid up capital. The paid up capital is the one the shareholder have finally been paid for. Is that taken? So let me give you a practical scenario, because we also still do a topic that is called issue of shares. Issue of shares is another topic that we are going to discuss. And in that topic, we are placed more of this kind of theory again. So let me give you a practical scenario. 10 people come together to form a company, and they want to raise a total of, let's say, 100 million. They now put it to percentage. Let's say they allocate 15% to me, they allocate 10% to you. You see, the percentage allocated to the both of us is the issue share capital. That is the part of authorized share capital of 100% that can be issued, that have been issued to the both of us. Can you see that? Now, as things progress, they expect us to be paying our own share one after the other, bit by bit, right? So if they call me to say, we have allocated 15% to you, come and pay 5%. So for calling me to come and pay a portion of my share capital issued to me, it is what we call paid up capital. So they have specified how much is my paid up capital. 5% of the what? 15%. Now, considering the Nigeria situation, I may not even have the 5% to pay. Let's say I now pay that much, 3% of the 5% that is called up. Then how much is the paid up capital now? 3%. Can say it's very simple, right? Very good. So, do you have question on type of share capital?
No, sir.
Please think about it, because we'll be discussing another topic, issue capital. Issue of shares. So it's very important you know this part. Okay. In the absence of none. Now we have the component of published financial statements here. I want you to explain them to me one after the other, because I remember explaining them to you in my last class. So let me see if you can still remember. Over to
the statement of financial position, also known as the balance sheet, is used to report the financial performance or financial status of the business or company. The statement
Go ahead, I'm listening. Go ahead, I'm listening. I will correct you at the end of the day.
The statement of profit and loss accounts presents the revenue and expenditure of the business at a specific period of time, usually a year. While the statement of financial position too is usually a year. That is the only two I can remember.
What about explanatory note and accounting policies? Do it a try.
Explanatory note and accounting policies.
Okay. So there's a mix-up. You said statement of financial position shows financial performance. You are very wrong. A statement of profit or loss and other comprehensive income is what shows the financial performance. That it shows the profitability of the business. While statement of financial positions, it shows the financial position, that is the health state of the business. Now, statement of financial position is reported as at. And it can actually be a 1 year report. It can actually be a period report. So most of the time we use ASAT. So it shows the financial health of the business. It shows the health position of the business. You can know the assets, you know the liability, you know the equity. So it's telling you the position of the business as of today, what the business stand to be for valuation purpose. You can actually ascertain that through statement of financial position, which is formally referred to as what? Balance sheet. Statement of profit and loss or loss and other comprehensive income is formally called profit and loss account. It is used to ascertain the profitability of the business. So whether the business is making profit or loss, you know it through this statement. And that's why you say it shows the financial performance. For at advanced class level, we can also use this as the basis of evaluating business performance to the EBITDA point of view or to the EPS point of view. Now, changes in equity, this one is new to you, but of course I discussed it in my previous class. The changes in equity shows the reconciliation of shareholding and equity balances. So here we see the shareholding structure. You see the amount of share capital, the reserve, the profit for the year. If there exists a premium in issue of shares, you also see it under changes in equity. So this shows the equity position. This shows the capital or structure position of the business. Statement of cash flow. Statement of cash flow is used to ascertain the liquidity position of the business. What do I mean by liquidity? Statement of cash flow is the statement that we use to know whether a company can meet its short-term obligations, because it shows the inflow, exact cash, and outflow. How money is being generated and how money is being spent. It is well specified under statement of cash flow. We have accounting standard number 7 that regulates cash flow. Now, since we are looking at ATS2 syllabus, so there's need for us to look at value-added statement. This is not identified under IFRS, but Wakama specify value-added statement, right? So value-added statement will help us to show how wealth has been created over time. Shows how wealth has been created over time and how it has been applied. Accounting policies and explanatory notes. Accounting policies represent the basis, the method entity adopt in preparing financial statement. While explanatory note is explaining the breakdown of the balance that we have in the account, also known as notes to the account. For instance, if you remember, while I was solving a question for you, was it last week or upper week, we discussed there's a particular one that I saw question on published account, right? Where I say revenue, cost of sales. I did not show the calculation of cost of sale in the main account. I put working note 1, then I went to another sheet to see workings. So that is what we call note to the account. It shows the breakdown of balances that you have in the main financial statement. Now, for simplicity purposes, we will concentrate on the following, while other will be considered in other chapters. That is, as we progress it, we focus on the major area. Now, profit or loss, statement of changes in equity, financial position, and accounting policies and significant, accounting policies and notes to the account. So cash flow is not here, right? So it will be discussed in our future chapter. Can you hear me?
Yes, sir.
What was the last thing I said? I think I was muted. What was the last thing I said?
You said cash flow is
Cash
not
flow is not here. Okay, good. So this is the income statement format, then we have the balance sheet format. Here is where we are going to stop for today. I want you to please take your time to master this format. Understand this format, because in our next class, we'll be discussing more of accounting questions. Feel free to ask me a question here, please.
Which one is other comprehensive income?
So other comprehensive income, in a very simple term, profit that you earn other than from the major ordinary activities of the business. You come and report it other comprehensive income. So at this level, you can see how account looks like now. It's well summarized, unlike the one we used to do back then in school. Trading profit and loss account, everything will be wide. No, here, well summarized. So you have to have a note to the account to briefly explain the breakdown of what you have here. So look at your balance sheet side. You know, there's what we used to call fixed assets, right? So fixed asset, the classification is what we now refer to as PPE.
Okay. That fixed asset, you said the classification is what we now refer to as PPE.
Yeah.
So anything under the fixed assets, we'll put it under PPE. I don't understand.
Yes.
Okay.
Like office furniture, plant and equipment, office property, office building, you classify everything as PPE, you post it here. No problem. I'll be teaching you IS 16 that talks about PPE. We have a lot to learn at this level. So that's why I will not rush you. And I expect you, after the class, always start to study again.
Right.
Continue looking. More questions, please.
No questions.
So my advice for you, ensure you lay your hand on some simple accounts that you know back then we call trading profit and loss account and balance sheet. That will really help you to get first-hand understanding, because from next week we'll be solving, I won't call them tough questions, but then it is what it is. So be prepared for a bigger challenge under this topic. The end. So that marks the end of our section for today. Like I said, it's a part one class. That's why I make it brief, to prepare your mind for the bigger challenges. So I would advise you to please try to do a revision. So far, so good. We have discussed about 4 topics, right? I think this will be the fifth one, if not the 4th one. So please, God bless you, and have a blessed weekend.
Yeah,
Bye.